Hi guys, this is Nathan from Winner's Edge Trading, and I just want to do a little bit of analysis here on the euro dollar. The euro dollar is the most traded pair, so most people are paying attention to it at all times, which includes us. And so the first thing I want to do is just point out a few levels here that have done some interesting things in regards to the euro dollar over the past few months. As you can see, I first drew a Fibonacci level from October to January, which was the high of the low. And I have highlighted the 23.6, 38.2, and 50 levels. And at each of these levels, price has done some interesting things. For instance, at 23.6, price actually has not closed below this level in a downward movement since 2011, the end of December here. Each time that it's come close, it's got rejected near this area and gone back up. Similarly, at the 38.2 level, price has had a very hard time breaking it. Each time it got up in this level, it was pushed down pretty hard. Here you see that it did break through and went up to the 50 area, and then eventually was pushed back down as well. Back again at this 23.6 level. And then lastly, this 50 level that I just pointed out had stopped any movement here, and also you'll see that price has shown a history of struggling at this level in this area as well. So if you're going to be trading the euro dollar, I would advise you to draw that fib and pay attention to these three levels. One thing that I will say is that I think that if it breaks 38.2 with some authority and closes above that, you have a pretty good chance of getting up to 50. And I think that if it breaks 50 and shows some follow through, then you have a pretty good chance of it going up for a while. There's not really any heavy resistance at the 61.8 level corresponding anywhere else, but with the euro dollar, it tends to struggle in a lot of areas because, again, the euro dollar is the most traded pair. So the most traders are looking at these support and resistance levels and making trades based on them, which means they're pumping money into the market, telling the currency which way to go. So you see more struggling at levels on this pair than any other pair, which means you have to be very careful, but also that means that there's more money in it to be had. So again, I just want to point out that technically we are still in a downtrend if you're looking at the daily from October, and this is technically just a retracement at this point a little bit above the 50 level. So from a long-term standpoint, I would say that this is a bearish trend. However, euro dollar has made new highs consistently in 2012 so far, here and here again, and it looks to be on its way up right now. Again, we're struggling at this level, but if it breaks through, we might again see new highs, which would lead me to believe that perhaps a new euro strength trend has begun. If I switch over to my euro dollar weekly chart, you see that price has pretty much stayed tame over the past 3 weeks. It's basically been in what we call a knife fight, so there hasn't been much movement. Now, one reason we see that price has been pretty dead is because of that level that I mentioned. You see that in this area, there's a lot of resistance and support kind of packed together, so price tends to struggle in that area. But if you take an outside larger view, you'll see that this is just one point in the euro dollar moving up and down. And looking at this weekly chart, you can kind of see why the euro dollar is so great to trade, why so many people love to trade it. I mean, you have these massive swings back and forth with lots of volatility, lots of movement, lots of liquidity. So it attracts a lot of traders. What it also does, though, is it makes this pair more attractive to trap traders for the big institutions because there's way more money in this pair than in any other pair in the Forex market. So again, you have to be very careful. One thing that I wanted to point out that makes me a little bit nervous about being bullish on this pair is this pattern right here. I refer to this as a twin tower bar, and basically what that is when there's a very large bullish full weekly bar followed by a complete rejection of that bar going the other direction. And a lot of times these twin tower bars are signals for what direction it's going to go for a while. Over here you see kind of the same pattern, and up here you see it a few times. And here's another really good example of a bullish twin tower. And so that does make me nervous about being bullish on this pair. However, when I go back to my daily chart, I'm still bullish on the idea of the euro dollar if it will break these levels. And I think that this could certainly begin a new euro dollar trend in the up direction, perhaps going back up to former highs at that 142.53 area that I show here. So that's kind of my thoughts on the euro dollar right now. I'm not ready to make any trades, but I'm definitely looking at it with a lot of interest, and I want to get involved in the euro dollar when I see a good signal. Another reason that you might notice that the euro dollar is not moving too much is because if you look at the open orders chart that Awanda provides, Awanda is actually the largest broker in the world too, so their instruments should be pretty accurate. But you see that it's close to a 50-50 relationship. So when it is close to a 50-50 relationship, that often means that there's not too much movement going on there. But eventually this will change. You can see that there's a couple other 50-50 relationships, like the US yen is extremely close to a 50-50 relationship. So that should mean that if I go to a US yen, there's not much movement lately. And you'll see that that's correct. There is not much movement. And that again has to do with the market being very equal at that 50-50 relationship. So once the euro dollar does swing out of this knife fight in one direction or the other, I will be very interested to either go short after breaking 23.6, go long after 38.2, and then adding more long after a break of 50. And I don't think it would be unreasonable that if it does break the northern levels, that it could continue to ride for a very, very long time. I think that the US dollar is probably overall in worse shape than the euro, even though the eurozone is having trouble. I think that the United States economy is in worse shape. We've seen signs of the economy rebounding, but it seems that the government is going to kind of quench those. So that's what I'm looking at right now, and I would appreciate your comments, kind of what you're thinking, what you think I may have right, what you think I may have wrong, because I just love to get ideas from other traders, and it's very possible that I don't even see something here that's obvious that you would like to point out. And I would really appreciate that just for me and for the other readers. So I really encourage you to leave a comment, a thought, perhaps if you're in the trade right now, or what you're looking to do in the future. So I hope you got something out of this analysis, and you'll hear from me soon. Thanks.